Let's do a quick check on the markets right now. I said the Dow is down 400 points. It's actually down over 600. The S&P is down 52. The NASDAQ is down by 268. And the Russell is down by 41. Look, stocks are certainly lower today and this week. But my next guest says this bull run has teeth. All 11 sectors are up on the year, so the gains have been broad. Let's bring her in, Shana Sissel, founder and CEO of Banrion Capital Management. I want to get to your stock picks, Shana, but we've been talking about the national debt and inflation on this show today, all week. Do you see 40 trillion reasons for investors to worry, especially with the sell-off we're seeing today?
I think there's some reason to worry. It's not time to panic, but it's certainly something to keep an eye on and a reason not to be all in on risk assets. It's certainly something I would be worried about in terms of managing volatility in portfolio and just allocating in a way where you can kind of mitigate risk associated with potential surprise related to the debt.
As oil prices continue to bubble up, 87 and change now, up 5 days, that is inflationary. You think it is a mistake for the Federal Reserve to hike rates at their meeting next month?
Yeah, because remember, Federal Reserve and monetary policy here can only really impact demand, right? And this is a supply side driven inflation that's happening. And so oil is going up because of what's happening in the Strait of Hormuz, what's happening with the war in Iran. And that is something that no amount of Fed hiking can address. If you look at the economic landscape, we have some stability, but it's not ragingly hot. So I think a hike would be a mistake here, but I also think a cut would be a mistake here. So standing pat, I think, is the most likely scenario, and it's the one that I think the Fed will continue to do.
When indecisive, they say do nothing. Okay, let's look at stocks overall. It's been a solid year. You have the major averages up between 10 and 12% on the year. Does that mean a correction is or is not imminent in your view?
I don't think that a correction is imminent. If you look at the valuation multiples, especially in some of the names that were really extended earlier in the year and late last year, those AI and those technology names, those valuations have definitely come in and they're much more reasonable at this state. And when you look, it's a broad-based rally. So it's not only being driven by a specific sector. All sectors in the S&P are up. Healthcare in particular has been very strong after 3 years of being very weak. And so a broad-based rally and an attractive overall multiple would not suggest that a correction is imminent.
NVIDIA reports in less than a week. You like them, you like Vertiv, and you like Corning. That's all AI.
Those are all AI driven, but they're all a little bit different in the role that they play in AI. Vertiv and Corning are data center plays. They have different roles in the data center play. And then NVIDIA is just kind of the 1,000-pound gorilla in the room. And it hasn't done well in the last year. So while some of its peers have really done well, I like Marvel, but Marvel has really done well. NVIDIA's been left behind a little bit. So I think there's an opportunity to kind of get in at a reasonable multiple. Its multiple is one of it at its lowest levels in years. So it's an opportunity to get in at an attractive valuation at a low multiple. And I don't think that the stock is impaired in any way. I think the long-term momentum is there. This is just some breathing room for investors to take advantage of.
It's really not selling off today either. I mean, it's down, but not by much. Two other picks that you have, Southern Copper and a defense name, Leidos Holdings. Two stocks with very different paths so far this year. Why do you like each of these?
So I really like Leidos because as a defense name, it's a fairly diversified defense name. I always like to point out that maybe you don't hear about Leidos as much as you hear about Lockheed and some of the other defense names, Raytheon. But Leidos is, if you fly at all, go through TSA, go through security. Every machine you go through is made by Leidos. And so it is very diversified. It has a health unit that is growing, and it has a cybersecurity aspect too. So Leidos is trading, I believe, at a multiple of 8 on forward earnings, which is ridiculously low. On average, it's between 13 and 14. It's well below its peers. It's certainly the most attractive. It's down 25% this year, but it has had a really nice stretch as of late. And so it's a stock that I really like. As far as Southern Copper goes, that's a different kind of more of a macro play. The company has a lot of things to like, but from a macro perspective, there's some technical aspects of Southern Copper that make it attractive at these levels that I would be paying attention to. And so some of the ratios with inflation and copper is looking very attractive right now.
That is a choppy chart. Shana Sissel, thank you very much for the time. And
Thank you.
I can't speak.